top three things in my notebook. Number one, Japan. Number two, China. And number three, oil. Now, Japan is interesting because, of course, it was closed for all of last week, so this was the first trading session for the Nikkei of 2014, and it got smoked. And that's predominantly, I guess, two factors. I guess you'd give it. Number one, the yen stopped going down, and the Nikkei does not like that. And number two, Japan was up a lot last year, so it's called mean reversion, which of course you've seen in U.S. equities as well. But Japan all of a sudden is down 2.4% for the year to date. Get the yen right, you're most likely going to get the Nikkei right. So keep your eyes on your fries there. China continues to be just sucks. I mean, I don't know what else you call it. I mean, down another 1.8% on bad economic data. Chinese services PMI misses again or slows again, rather down to 50.9 in December on that services PMI reading from HSBC, down from 52.5 in November. So again, growth slowing in China, stock market down last year in China, and it's down 3.3% for the year to date. And no, we're not long China. Finally, oil just getting smoked last week, and this is really the topic of this morning's early look. So to be clear, the world is long of oil. There's almost 390,000 net long contracts in futures and options that are long oil. It's the biggest global macro long position there is, so keep that in mind. And last week, it was not friendly to the bulls. Last week, in terms of WTI, it was down 6.3%, leading laggards in the commodity complex week over week. Gasoline was down 5.7%. Brent oil was down 4.7%. And guess what? Consumer discretionary stocks like that, they were the only subsector in the U.S. stock market that was actually up on the week. And again, not a conceptual surprise there, because cutting the oil price would be, in fact, a tax cut. So those are the top three things.